Bauer, CEO of Prosper Trader Academy. Scott, I got to start off right off the bat. The dollar, it's been a machine this year. It seems like nothing has been able to stall its march up. And since October, when it touched 99, we've been kind of in a soft spot with it, and then you get Friday, you get kind of two decent, red days on Thursday and Friday. But then guess who's jumping and pushing forward on Sunday and in today? Back in the green, we're talking the dollar. Did we write off the dollar a little too fast here or what?
I mean, it's so resurgent, right? I mean, it's been so part of the risk-on, risk-off trade that we've seen. And, that's why we saw it, really back off a little bit end of last week, based on the purported decent talk with China. And yet, when we got some news last night, early this morning, that China's maybe a little bit hesitant or they want to see more, where do we run to? We run right back to the dollar. And, it's up pretty handily this morning, JB.
Yeah, so what I also thought was interesting is you kind of go to that side of the world was on Friday, there was one currency, the Australian dollar, just been absolutely annihilated. And all of a sudden, the Australian dollar got a nice little bid. It hit a 2-week high. The core issues facing that Australian economy were not gone. However, the dependence within China and that's relationship seemed to really push it back. But now all of a sudden you're looking at Aussie dollar, the news of sort of concern about how fast this phase one deal goes, that Aussie dollar just went over and got whacked right back down again.
Yeah, which shows you how interdependent, right, the Aussie economy is with China and the news that's going on with China there. So again, this was such a classic case, and I'm not being the Monday morning quarterback, and it is Monday morning right now, but this was such the classic case of buy the rumor, sell the news.
Yeah, so Scott, I'm kind of keeping that space there too. I'm going over to Japan. I know it's closed here today, but I guess what really surprised me overall was, you had this such great momentum coming in on Friday. Everybody feeling so excited that basically the two economies were coming together. Then all of a sudden, you kind of looked at all the risk, so the flight to safety assets, and the yen in this case actually opened up positive. It was 3 days down, driven by that trade deal optimism. Now all of a sudden you get a deal, but then you'd expect it to go down, but it actually had a little pop on the way up.
Yeah, and I saw that too, and my thought process on that is maybe that part of the world, or maybe just investors were looking at the overall deal and saying, what, we don't know so much about this. So even though we saw the huge move in bonds and we saw the huge move in volatility with the VIX here, and lots of risk on appetite, we didn't see that in the yuan, and maybe that was or in the in the dollar, and maybe that was kind of the overriding, still we're going to be real cautious about this deal.
So as we move kind of back here to Europe, what's coming for you. It's the required Brexit question, because we got all kinds of crazy stuff. This week is basically sort of the deadline for them to come together with some sort of agreement from the British Parliament standpoint, right? They're talking about being on a Saturday session for the first time. I don't know if it was 1952 or 32, but needless to say, a long time. But I'm wondering, because all of a sudden that optimism in the pound, if you're looking at there, it was up and away. And now all of a sudden the Sunday diplomats are saying, well, maybe there's no breakthrough. So now all of a sudden you're seeing it ooze and kind of work its way back down again.
It's another case of buy the rumor, sell the news. And, Ben and I have had this discussion for a long time. My thoughts over the last few months has been that this is going to get pushed down the road again. And I still see that as a very likely scenario, JB, that, this week, I know there's a meeting in Brussels. This week, we may see an announcement that, they're close to some sort of accommodation here, but they still have work to do on it. So we might see the Brexit be pushed down from October 31st into the first quarter of next year. I think that's a very, very likely scenario.
So with that being the case and some big European data coming out this week, do you expect then the euro to also start to exhibit a little bit more of the volatility that we've seen in the pound? Because I haven't really seen it that much in the last week or so.
Not in the euro, not like we've seen in the pound. And like you said, we saw that big rally last week, down about 0.5% this morning. And I would expect that with the euro, although I would say that expectations for the data coming out of the Eurozone are not real good. So, if we get something that is much better than expected, we could see a big pop. However, like I said, expectations are pretty low right here, but volatility should pick up. It has not been like what the pound has been over the last week or so.
So Scott, before I let you go, I want to kind of get your take on the Treasury market. You kind of hinted at it already last week. You saw that big move across the board in yields. Last night we saw sort of the Treasury suite kind of get bid up here again, which obviously then starts to push the yields back down. What are you sort of seeing or what are you thinking you're going to see come through here as this quote unquote details of a partial kind of trade twos, whatever it may be? What do you see happen here with these yields going forward?
So I think we sold off way too quickly last week on some of this news here. I mean, there was, some big knee-jerk reactions in the bond market here based on what might be, could be, should be with the China tariff talks. And now we're seeing, yields this morning really coming down and a bid for bonds this morning. I think we're going to see this continued volatility here. But again, I think we're going to stabilize. I think we put in a temporary, let's say, I don't want to say bottom, but a big support area. In fact, if you look at some of the indices, look at the TLT, look at the 10-year, we really came down to some big support there that we breached for a little bit at the end of last week as some of the risk on appetite came into the market. And I thought, it got hit way too hard. I think we stabilized a little bit. I would, probably look to see the 10-year coming back down below 160-ish again here. And it's going to be a lot of give and take. It's going to be extremely, extremely volatile over the next couple of weeks, especially because China came out, just overnight or just a few hours ago and said, we really have to look at this phase one, and we're not going to really make any decision on it until the end of the month. So that gives us another 2 to 3 weeks of this volatility, at least.
Well, Scott, thanks a lot for taking some time here to talk a dollar, some euro, some pound, and even a little treasuries.
All right. Thanks, JB.
Everyone, that was Scott Bauer, CEO of Prosper Trading Academy.